everybody? Welcome back to another stream. Welcome back to another coffee hour. All right, I hope you guys are having a wonderful day. Hope you guys had a great Easter weekend. All right, I know some of you guys celebrated that, so I hope your weekend was very nice, relaxful, and hopefully uneventful. Today, absolute bloodbath. Today was an absolute bloodbath in the markets. It was just really, shitty. I mean, let's just be honest. And it's primarily driven because of, sorry, I'm still trying to get set up over here on my side. I had a late start, so excuse me for getting all this stuff last minute. But yeah, we had kind of a huge sell-off today, mostly primarily due to the Fed and mostly to the U.S. president basically saying that he wants to cut Powell out. And basically politicize the Federal Reserve. Now, there's two trains of thoughts there. You know, I was watching a lot of videos over the weekend on kind of just, you know, other people's thoughts on this, because that was the driving news this whole weekend was, you know, the Federal Reserve and kind of what their future is. What is Jerome Powell's future? And there's, you know, kind of two camps in this. There's some that, you know, well, there's a few camps in this. There's people who don't want the Fed to even be a thing anymore. And there's people who want Jerome Powell out. And then, you know, they want basically a Trump loyalist installed. And then there's people who also think that Jerome Powell's doing a great job and that the next Federal Reserve chair should be, you know, someone of the same caliber. Now, I did see there was an article somewhere out there that said Scott Bessent was looking for a brand new Federal Reserve chair. So we'll see how that plays out. It's just, man, this is like so crazy right now. It's just turning real crazy. Alex, good morning. Income bearing, absolutely unbelievable. And good morning, G bro. Good morning or good evening to you guys, all of you guys. Hope you guys had a great Easter, great weekend, and hope you survived today's bloodbath. Today I had to make a portfolio change, or I had to flock to safety. All right, I'm not even ashamed to say that. It was kind of shitty, but I had to take advantage of the situation as it was there. So you guys will see that the portfolio is going to be a little different today. This whole stream is going to be a little different today. There was a lot of news. There was some news on NVIDIA. There's some news on Huawei chips being shipped. There was some news on, what else do we have? There was some news on not just NVIDIA, but there was also some other news. But I didn't have a whole lot of time to get through that stuff. I had a late start today. But I wanted to really try to do something a little different for this stream today, because I want to get more consistent in doing streams. You know, doing them every day, sometimes you run out of things to talk about, and sometimes there's slow news days, right? There's just news days where it's like there's not a whole lot of juice out there, a whole lot of, you know, spicy news out there. So you got to kind of think on your feet on what to talk about. So today, that's kind of what this is. It's going to be just a little bit of a change in the format. I'm still going to cover, you know, a little bit of stock market stuff. We're going to cover the market, you know, general market news. And then, you know, we're really going to roll really into the portfolio updates, because I think there's a lot of value there, because I basically want to explain what I'm thinking and then just kind of get other people's thoughts on everything, because right now it's absolutely crazy. It's absolutely crazy. It's shitty too. I'm not going to lie. So I gotta log into Robinhood here, and then we'll get into everything. So let me log into Robinhood. So I also want to do a video, because some of you guys know that I do invest in real estate, and I have been working kind of on a presentation. Let me show you guys real fast. So I have also been working on a presentation that I would like to do for you guys, but I don't know if I want to do it as a YouTube video or as a stream, or maybe just as for Discord members, because it's the way when you talk about these real estate investments, they're called real estate syndications. It's a really highly regulated space, and when you start advertising or talking about these things, you gotta hit a lot of disclaimers, because it could look like, you know, I'm you know, raising for the deal is really what the terminology is, that I'm raising for the deal. And if I was to do that, especially with a deal that's live, then, you know, I can run into some hot water. So I have to be very, very careful. but I am working on kind of like a presentation using kind of like a fake, using a fake, a fake deal. And then I'll basically go over what these look like, right? So it is something I'm toying with on how I want to do it. Maybe I'll do it for a stream and kind of just talk about, what real estate syndications are. They're not tied to the stock market, and maybe talk about how they differ, from like rental property investing, actual traditional rental property investing, or how they differ from investing in REITs, because I know REITs are very popular. A lot of people have been really like I probably get the most questions about REITs than I do about anything else. And I know there's a lot of interest there. I know there's a lot of interest in real estate, and I think investing in REITs is a great alternative to investing in rental properties, especially when you don't have that much cash. And I am, based on the data from the National Association of Real Estate Investment Trusts, REITs over longer periods of time, but you're thinking 15, 20, 25, 30 years, they do outperform rental properties, and they do outperform the S&P 500, which is, I didn't even know that, but that is a fact. But again, who wants to wait 20, to 30 years for REITs to outperform? So again, we'll be taking a look at, I'll be thinking about how I want to present this to you guys. So anyways, let me just get this M1 Finance thing squared away, and then we'll kind of get into everything. So quick check. Let me just read the comments. Oh my God, my screens are so messed up right now. Okay, we'll just go with this. All right. Hey, Galveston County, good morning, man. Hey, welcome back. Hope you had a great weekend. A path to retirement. What's up, Julio? What's going on? It's shitty for some, it's good for others. That's 100% fact. Right now is a great opportunity to buy shares on the cheap, right? To buy shares of companies or ETFs you really like on the cheap. I was talking with James. He comes on the stream every now and again. Oh, there he is right there. Fun day today. James, I was just talking about you. Your ears must have been burning. But he follows this methodology called Income Factory from the author Stephen Bavaria. He's a Seeking Alpha author. But the Income Factory, basically, and I'm reading through the book now, he basically talks about, like, he doesn't buy high income yielding ETFs, like cover call ETFs like that. I think that is like, for him, it's probably like trash, to be honest. What Stephen Bavaria does is he buys highest yielding, like closed-end funds or REITs or BDCs or other types of high-yielding instruments, right? But he talks about, like, share price is irrelevant in the Income Factor. He talks about when you buy these income funds or these income vehicles or these income stocks, price is almost irrelevant because you're really banking. If the company is really good, if the underlying company is really good, the balance sheet is good, all that stuff is really good, credit, everything about this company is good, then who cares about share price, right? He's talking about building a lot of income from a lot of different streams, right, to create that river. So I like the book so far. I'm not going to just completely change my entire strategy, obviously, but it is a good read for those who might be interested in something like that. Again, that book is called Income Factory. I haven't fully read it yet. I'm going through it now. But he does raise some good points. And the thing about Stephen Bavaria is that, according to his book, when he first came out with the idea of income investing, like, he was the income investor before this was a thing. It sounds like, I don't know, but his whole train of thought was just buy high yielding stocks, ETFs, and closed-end funds and BDCs, right? And then buy a lot of them, like have 100 holdings, right? And then just constantly add money to this factory, to this income factory, and use that money to basically dividend snowball your way to victory. So it does look like it is an interesting read for sure, especially right now in this high yield space. But yeah, he was like the OG of income investing. He is the OG of income investing. And when he first came out with this theory, a lot of people were basically lambasting him and saying, you're an idiot. You need to think about capital gains. The whole NAV erosion like fight that we're having now. But he's basically thinking like, no, like, who cares if you can get consistent 10% returns every single year? in just dividend income, who cares about capital appreciation? That'd be the icing on the cake, right? So he got lambasted for that quite a bit. A lot of people were saying that, his methodology is stupid. It makes no sense. Young people shouldn't be investing in this. We need to be doing capital gain plays, S&P 500, and then banking off the 4%. So it was a very interesting. Well, so far it's a very interesting read. Gbro says, loving, oh, well, hold on. BR Supreme Constitution says, I believe for over a decade that the Federal Reserve should be abolished. Today's market sell-off felt like a win for me. I used it as a chance to buy more. Awesome. Hey, that's dope, man. That's dope. Yeah, there is two camps to this whole like Federal Reserve business. Well, not just two camps. There's a couple camps. And I don't like to talk about, you know what, guys, we're going to go off stream. We're just going to do something completely different because I like what we're talking about here. So we're going to do something a little different here. Let me pull up. And this, again, guys, I'm not trying to make this political. All right. But you have to take these things, you have to take everything in the totality of the circumstance, right? So what I mean is, like, right now we have an administration. Previously, he was saying, oh, I don't even know what Project 25 is. Never heard of the document. Well, it looks like he's following Project 2025 to the T, right? And this was kind of the document I used for my due diligence for Palantir, because in Project 2025, there is a segment in there that they want to move the entire intelligence industry, the entire, like the CIA, DEI, or DIA, the NSA, everybody, they want to move them all to some type of centralized AI thing, right? Whatever that thing is. For me, my belief is that thing is Palantir. So again, I hate using this because I know it might rile some feelings, and people, whether you love them or hate them, don't really care. But what I want us to do is just look at something that's interesting. So this is the Project 2025 Observer. It's just a website. You guys can check it out yourself. And basically it lists out every one of the objectives in that project document. Okay. Now I'm not conservative. I'm not liberal. I'm not any of these things. I'm not trying to put myself in any bucket. I'm just saying this is what I'm using as part of my own internal research. Okay. So if we look somewhere down here in the Federal Reserve, there's two objectives that a lot of people don't know, and it looks like it's starting to head that way. All right. Eliminate the Federal Reserve's mission of full employment, which is one of them, and then abolish the Federal Reserve and move to a free banking system. So these are 2 points in Project 2025 that I think will eventually play out sometime in the future, right? It's starting to look that way because not too long ago, President Trump did approach the Supreme Court. His administration approached the Supreme Court and asked, how can they get rid of these I guess public servants that were hired by the Biden administration. Now, Powell was hired by President Trump at the time in 2018, but I think that set a precedent for how they plan to get rid of Jerome Powell. So again, this is all interesting to read through and just look at and then absorb. Oops. So if we're to look at some of this stuff, like he is playing this document to a T. All right. If you look at some of the stuff and read about some of the stuff, like the intelligence agency, the IC transition to using artificial intelligence to analyze information. What is that? What is that thing that they're going to use? Right. So I think this is in progress right now, and we keep hearing about how all these intelligence agencies are moving already to Palantir. So this is why I am super bullish on Palantir, right? This is already happening right now. So again, this is an interesting thing. It's Project 2025.observer. Recommend people just look at this thing from time to time because it is interesting how life is starting to play out. So I'll get off of that thing. Let's see. Going back to the comment section, Grant Income Baron asked, Grant Cardone type of real estate investing. Yeah, yes. So Citizen of the Year had also asked about had also asked about, real estate syndications. So I wanted to do a video on it. I was filming a video, and then the whole thing crashed on me. My computer crashed, blue screen, lost the whole video. And I'm not gonna lie, I was lazy. I'm not gonna do it again. But I am thinking of, like I said, doing it for either the Discord group as a private video, because again, I want to be careful on how I present it, or I can do it for the stream, or I can try to redo it for the video. I kind of like the idea of doing it as a live stream, because you guys can ask your questions. And again, I'm more than happy to answer this stuff. I've invested in a couple syndications myself. I haven't gone full cycle on these real estate investments. They're laden with certain types of risks, versus investing in REITs. And just like anything else in investment world, things can go bad and things can go to zero. So you have to be very careful on how you invest in real estate syndications. But this real estate syndications, or investing directly into real estate, that's really what the wealthy people like invest into. Excuse me. So there was a report by Tiger 21, and Tiger 21 is a wealth management, basically a wealth management firm, right? They cater to like the very ultra wealthy. And Tiger 21, you can look them up, tiger21.com. But Tiger 21, they published a piece not too long ago, basically saying that most of the wealthy's money is not in the stock market right now. It has a very low allocation. It is mostly allocated to private equity and to real estate. I think that made up 60% of most high net worth individuals' portfolios at this moment. So kind of a telltale sign of how, the ultra wealthy are looking at investing. They're not investing in high income funds. They're not investing in S&P 500 indexes. They're putting their money in private equity, things like BlackRock, things like Apollo, things like Blackstone. They're private offerings, not the stock. They're private offerings. And they're putting their money in real estate and real estate syndications, right? Or real estate funds. There's real estate funds that, you have to be a certain net worth in order to invest in these things, and you have to bring a certain dollar amount. Like you can't just invest with $100. So that type of investing is very, very selective. It's very it's not accessible to everyday people like you and I. So again, it comes with its own unique risks, its own unique problems and things like that. But I would like to do a video for you guys just so you can see a different side of real estate versus the rental property investing or the REITs or, or whatever else, Airbnbs, I guess. All right. So just moving on, going over the comments, strategies over spreadsheets, profits over screenshots. Smci. Fun day today, says James Maggs. G-Bro says, looked at the cost of the income factor, you might get it. I would recommend it. It is a good book. I got the Audible version, so I'm just kind of going through that. So every time I, now I'm back in the gym. So as I'm walking to the gym, I'm just kind of like listening to the Income Factory. And look him up on Seeking Alpha as well, Stephen Bavaria. Very, very smart guy. I really do like his methodology and the way he approaches the stock market. Another good author. He doesn't have any books, but he writes a lot on Seeking Alpha, and he does have a YouTube channel. Is Jussi Ascola. He does a lot of stuff for REITs. He's like a huge REIT proponent. I would really recommend anything from him, anything that he does, whether it's YouTube or Seeking Alpha articles. If he comes out with a book, I'll buy the book. But he's a really, really good author. I really like his stuff. Let's see. Just reading through more comments. Yeah, I mean, it's good for rookies. Again, you might have to, like, if you get stuck on the concepts, drop it in the Discord and just ask about it. I'll probably be the one to respond to it. But yeah, I mean, I recommend you just like expose yourself to it. Even if you don't do anything with the information, at least you can get the information, at least have it in the back of your pocket. I read the Path of Wealthy. What was it? The Simple Path to Wealth by J.L. Collins. Like, I didn't even know what the hell I was reading. Right? I had no idea what I was reading. But then as I got more involved in the stock market, as I started to learn more and more about investing, then I went back to the Simple Path of Wealth. And I was like, holy crap, like, this is a great book, right? I understand it now. I understand the percentages. I understand VXUS. I understand international stocks, bonds. I understand, why an index is or like how indexes are constructed. I understand the expense ratio, understand why that's so important, and understand everything else, right? So, again, at least you get the exposure to it. Even if you don't fully understand it or grasp it right now, you as you continue investing, as you continue on this journey of making money and building wealth, eventually it'll all click for you. Like it'll all just like make sense, and you'll be like, holy crap. And then you'll go back and read the stuff, and it just makes a whole lot more sense. Like some people hate Robert Kiyosaki, some love him. I love Robert Kiyosaki. His book, Rich Dad Poor Dad, I probably read that easily once a year. And there's always some like stupid little nugget in there in that book that I pick up that I did not understand in the previous year or whatever, or it's a great reminder. A lot of his new books are kind of like really edgy, that he really, really does not like communists. I mean, who would, right? He really doesn't like communists. But yeah, a lot of his latest books, are kind of focused on, basically beating the left and everything else. Yeah, it gets kind of crazy, but like I still read them because they're good books on history. Like he does tell it from the lens of someone who saw communism firsthand when he was a pilot in Vietnam, like during the Vietnam War. So, Robert Kiyosaki, a lot of people don't know that about him. Former Marine, he saw a lot of combat, he saw what communist does. He was buying gold in like the 1970s, right? Like he was stockpiling gold ever since then. And right now he's probably made out like a bandit, like an absolute bandit, because I forget how much gold he's had, but he actually had to move a lot of his gold outside of the United States. And I think he said he placed it in Switzerland in like those big fancy vaults. So he owns gold, Bitcoin, and real estate. He does not own any stocks. If that's changed, I don't know, but that was the last time I, heard about that. Let's see, just continuing reading the comments. Income Baron says Skynet. Yeah, that's basically what Palantir is going to be. I really think so. Unfortunately, politics, stock market go hand in hand. Yeah, that's really the big unfortunate. He definitely voted for Kamala. Shut up, citizen. Let's see. G bro, that's why. Hey, I appreciate you, man. I appreciate that comment. 6x margin on PLTW. Got it. Hell yeah, that's what I'm talking about. Latro, what's up, man? Welcome back. Let's see. Shelter today. Bitcoin derivatives. Yeah, I took a little shelter myself. I sold out of PLTW, guys. I'm just gonna be upfront with you. Not because I don't like Palantir or PLTW, but because I was basically at break even. And I'm like, dude, if this stock market continues to go the way it's going, I need to have cash available. Like that's all there is to it. I need to have cash available. I can always buy back into PLTW at a lower price, but I need to be able to weather this storm, because if the portfolio implodes on itself, then what's the point, right? What's the point of pretty much having anything, right? So I wanted to protect myself, protect the portfolio from this. So I made that tactical decision, I suppose, of selling out of PLTW for now, and then I'll hop back in probably a little later. But this whole, like right now, well, I'm going so off topic, but yeah, there's just the way the market is right now. I just want to make sure that I can weather the storm, especially in a margined portfolio. All right, it is what it is, guys. It's scary as hell. I'm not gonna lie and say my emotions aren't getting the best of me. But when you start to see these super large declines, 3% on an index is a lot. And it looks like we're trending back down to the all-time low that we faced not too long ago, about a week and a half ago, before the 90-day tariff pause. So whether, the president is going to announce some very good news, I have no idea. But the whole news about, getting rid of the Federal Reserve and putting a new puppet in there, definitely riled the markets up, and that was not good for business. Let's see. Rich Dad Poor Dad is great, says Alex. Absolutely, 100%. I really like that was my first book that got me started. Once I like, it's stupid and as simple as it is. Like up until about 25, 26 years old, I thought the only way you could become a millionaire was by, buying or creating businesses, right? Like building like an Uber or something and then selling it, right? So I did have a startup at one point. It was a technology startup, and that flopped, lost, all my money in that. And then, as I was reading, Rich Dad Poor Dad, going back to the whole thing, like, the rich don't work for money. It's like, and then you start going down the rabbit hole and you start asking, okay, well, what do the rich own? Well, they own stocks and real estate. And then, you just kind of like continue going down that rabbit hole. But ever since I read that line, like it just clicked for me. And that's pretty much been my thing for a very long time, is just put as much money as possible to, to some type of income generating, business, i.e. stocks or real estate. It's funny, like, because finance too was not as mature as it is today. Like, there were no YouTubers back then, let's say in 2015, 2016, that were showing portfolios, doing any of that. So anyone coming in now, like, you have a huge advantage. You get to hear 100 different perspectives of different investors, right? Whether you like them or hate them, whether they're right or wrong, you still get to expose yourself to that and see what they're doing and see their line of thinking, which is a huge advantage. Because again, back then, 2016, 2015, the only thing you found on YouTube was a bunch of Tai Lopez, get rich quick videos. But nowadays it's like, you can't turn on YouTube without hitting some type of finance tuber. So like, the only other way you would have learned that stuff is if somebody told you about it, taught you it, or you read the books on it. Like I had zero financial literacy up until I was about 25, 26 years old. So I got a huge late start in life. I didn't even know what the hell a 401k was, right? But now, now it's like I'm pretty well versed in the stuff, and like I've done it all. Like I've been there, done that, got the t-shirt, got the scars, got the losses to prove it. So it's just people who are getting into investing now have such a massive advantage, in just my opinion. So anyways, let's see what else we got. Yeah, Latro says it perfectly. First understand the macro, right? And then get fancy. And that's why I always touch on the politics side, as much as I don't like to. But if we look even further than that and look at the geopolitics, the China-US trade war that we got going on, and kind of why the United States is doing this stuff. Like, there's some YouTube channels out there that I really like, and they really talk about this macro stuff. And I post some of the videos in the Discord. Patrick Boyle, probably one of my favorite YouTubers, who does really macro style like videos, really in-depth stuff. And I like looking at his stuff. Because he does give you a good viewpoint on, or a perspective on things. Ray Dalio, he wrote the book Principles. He wrote a couple other books. He's a macro like analyst. He's the founder of Bridgewater Associates. He went through some shit. He went through some shit. Imagine having millions of dollars of client money and then losing all of it. You would think he'd be destroyed at that point, but he came back. And then, he's actually more or less the father of the chicken nugget. Like, the chicken nugget would not exist today by McDonald's had Ray Dalio not figured out, these whole future contracts between, I guess, farmers and grain for chickens and something else. I forget the whole story, but basically Ray Dalio had a huge point in that. And not only that, Bridgewater Associates / Ray Dalio, very instrumental in not just American, finance, but also other countries. Other countries have come to him for guidance on how to run their economies, right? Or how to look at certain issues or things like that. Like Ray Dalio, like he always touted about China, and he called it like years ago. He called it. He said the United States and China are going to come at this point, this inflection point, where one is going to be more dominant than the other, and they're going to fight, right? That's just the way it is. It's the changing world order, right? And the United States, usually for changing world orders, they happen every like 250 years, 300 years from what he said. But, right now, the United States and China, they're right at that cusp of like who has the bigger stick, who's the dominant power, right? And right now, we're not having a conventional war like, bullets and bombs. We're having a trade war, right? Which is going to be the deciding factor on the hegemony of the United States, right? Will the United States maintain its dominance in the world? And we look at this as like stock market people, right? As people just investing little tiny specks, little investors in the stock market. But you look at that stuff, and it just helps you kind of wade through a lot of the nonsense of the day to day, right? Like it helps you, it either scares the shit out of you because you're like, holy crap, the United States is playing on a bigger stage right now, like a world global war stage. but it helps you kind of realize like what's actually happening besides, oh, Nvidia shares fell 3% because they can't ship their chips. Well, why can't they ship their chips? Oh, they can't ship them to China. Well, why isn't China not taking them? It's because they have companies that are trying to beat out Nvidia, because Nvidia is the 100-pound gorilla in the damn room, or not 100-pound, probably 2,000-pound gorilla in the room, right? So you look at these things and it just helps you come to a better conclusion on how you should look at your holdings, on how you should look at your companies, how you should look at your stock investments, or how you should even just invest in general, in my opinion. All right, guys. Man, you guys got me fired up today. I really thought today was going to be a boring day, but here we are. Like, I'm just going crazy today. All right, let's see. Going back to the comments. The rich don't work for money. Absolutely, 100%. Yeah, so Citizen of the Year hits it on the head. Like, people, like, back then, and I grew up this way, so I know firsthand. Like, my only thought was put money in a bank, right? That's all I knew. Put money in a bank. I didn't know about savings accounts or any of that, but I just knew put money in a bank, right? That's how people get rich, I guess, right? And then I never figured it out. I was like, this makes no sense. Like, how do you, if you work, like I started seeing articles of like people working like for $50,000 a year, right? For many, many, many years, right? And over many, many, many years up until retirement, they would clear about $1 million. And I'm like, how the hell are people able to do this? Whereas other people who are like 30 years old, 35, 40 years old, making millions already, right? And then, you go down the rabbit hole, entrepreneurship, starting their own companies, blah, 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 right? But there wasn't that much on finance. There wasn't that much on stock market stuff, right? It was always the Ty Lopez stuff, create digital products, sell a product or something like that. It was always that kind of line of thinking. But there was no, back then on YouTube, there was no finance tube. There was no finance tube. So now it's like an overabundance of finance tube. Like, you can have a cell phone and just log into your Robinhood app and just talk about finance. And I mean, I think that is infinitely more valuable today than anything, because these are just regular people just explaining, their investment theories, their investment theses. Again, back then there was none of that. So, again, anyone who's new into investing or just getting into it, you're infinitely way better off right now than you were way back when. So this whole idea of, not being able to get rich or there's no information out there is like full of bullshit. Like there's an overabundance of information out, and there's so many books and so many articles. There's so many, like, it's so freely available. It's ridiculous. Like, imagine way back when, like in the 90s, early 90s, in order to understand stock investing, like you probably had to go to college. In order to place a buy on a stock that you do on your cell phone, you click buy. Back then, you had to call a broker at Fidelity or Vanguard or some other, shady broker that would charge you a fee, a large fee, in order to make a trade, right? Back then, way back then, like, it was infinitely way more harder to make a trade than it is today. Now you can do it from your computer, you can do it from your phone, and you could do it. You could check your charts. You're intelligent enough to, look at articles or review other people's, comments on stuff, so you can come to your own conclusion. Like, things are so much infinitely better and easier now to invest. And yeah, Cody hits it right on the head. People still make excuses for not being rich. Exactly, 100% true. Like, I definitely agree that not everyone grows up obviously at a level playing field. Some people have more advantages than others, which is a fact. I mean, I definitely did not grow up with advantages. I don't have a trust fund. I don't have any of that stuff. I essentially grew up poor, like very lower middle class, extremely, basically above the line of poverty, single family household, all that stuff. And but the opportunity is there. Like, all the opportunities were afforded to me, but I had to go out and get those opportunities, right? I had to work hard for them. I'm sure most of you guys also work hard for them. Now, I'm not saying, like, I'm saying by and large, there's opportunities for everybody. The education is freely available at this point. There's opportunities for everybody to at least get what, whatever they work hard for. If people like don't want to work hard and they just want the free handout, then I mean, so be it. It is what it is. You're always going to have, you're always going to have people who who want to do the work and then people who don't want to do the work, right? I'm not here to judge, but it is what it is. Like I hate that whole term, eat the rich, because I'm trying to be rich, bro. Like I'm trying to get my money. Like, but like I'm coming from humble beginnings. So like, just because I'm coming from humble beginnings and I'm trying to get rich, that makes me a bad guy. Like I think, I think that stuff, it really, like, there's a lot of points missed, and there's a lot of false narratives out there. There's a lot of, I don't know, divisive like shit out there. It's like, why is it bad to want a better life? Right? Like, why is it bad to want a better life? Man, I'm so off topic, guys. Let me try to reel it back in. Let's see. Yeah, Alex hits yep, his views on assets, liabilities. And that's really the way I looked at it too, was, Robert Kiyosaki's assets and liabilities. Because again, like his thing is so simple. It's assets put money in your pocket. That's all there is to it. Liabilities takes money away from you. That's it. Like, it's just black and white. And, he was very controversial. Speaking of Robert Kiyosaki, he was very controversial when he came out and said that your primary home is not your asset, right? Because it doesn't put money in your pocket, right? But just having those two definitions was tremendously helpful. Absolutely helpful. And once I read that stuff in his book, it's like you look at the world completely different. Friends could be liabilities. Family could be liabilities. Your significant partner, your girlfriend, wife, husband, whatever, they can be liabilities, right? Because I've had friends who didn't understand these terms of asset and liability, right? And had to have that heart to heart. It's like, bro, I don't think your girl is an asset. She's not adding anything to your life, and she's spending your money like it's freaking fun bucks at a theme park. Like, that's not good, right? The same, it could be you could really take those two definitions and apply them to a lot of different parts of life. So I love that book. I always recommend it. Of course, there's people out there who absolutely hate Robert Kiyosaki, and they hate the way he teaches and everything else, which, again, I of course, there's always gonna be two camps. I don't agree with everything he says, but I will say that book was eye-opening for me, right? Just absolutely eye-opening for me. Oh my God, Galveston County Mike, bro, you didn't have to do that. Damn, you didn't have to do that, brother. I appreciate that. Man, I'm about to put that $10 into msty. Back in the 1980s and 1990s, it was easier to invest in mutual funds. Purchases were done by phone with 3% load. Shoot, holy crap. A 3% load, damn. Made money in Fidelity, Magellan Fund, market collapsed in 1987, bought stuff on sale. I know we talked about the Magellan Fund. Very famous investor, Peter Lynch. He ran the Magellan Fund. He ran it for, I think, 10 years. And he had a annualized return of 29% over 10 years, right? That is ridiculous. If the stock market, the S&P 500 over, 30 years returns, 10%, 8%, then he trounced the S&P 500, right? So he definitely not only earned that 3% load fee, but man, like the Magellan Fund was absolutely legendary because he had like 1,000 or 2,000 stocks in there, but his philosophy was so simple. It was just buy stocks you like, right? Buy stocks you see every single day. And one of his famous stories in his book, One Up on Wall Street, his wife was looking at like some clothes or something, and he wondered if they had a stock, and they did. And he realized that their store had a line going out the door, so he bought the stock, and the stock did very well. Then he talks about, was it 10 baggers, 20 baggers or something like that? But yeah, like I really thoroughly enjoyed his book, One Up on Wall Street. But Peter Lynch, really, really smart guy. And you can look him up on YouTube. He has a couple videos out there. The way he talks about the stock market is really just reassuring, especially during times like this where there's volatility out the butt and we're seeing declines go like off the charts, right? We're just seeing massive drops for almost no reason. It's, again, when we had that first drop, for the 90-day tariffs and everything, I mean, hell, you don't see indexes drop like that, like normally dropping 5 or 10% in a single day. You just don't see that. And for us to go through that Black Swan event, all that other stuff into consideration, it's just really scary. It's really scary stuff. And I can only imagine the retirees right now who are nearing retirement and they're seeing their portfolios just almost evaporate in front of their face, and there's nothing they can do about it. You have to just weather in, stay in the storm, dollar cost average, and then just kind of hope for the best, hope that it goes back up. So, again, think keeping that in the back of your mind. We still have midterm elections coming up. Sometime, was it next year, I think, or something like that. So there was an investor or a YouTuber that put out a really interesting timeline. He basically said that this year we're going to have all the volatility, but keep in the back of your mind that midterm elections are next year. So if we don't get, or if the president does not get the economy going by the second half of this year or late April or late fall, if he does not get the stock market back up to where it should be or the economy back on track, the midterms are going to be completely lost. So it's going to be interesting, guys. This year is going to be spicy. It's going to be very, very volatile. This is going to be the year where a lot of people can make a lot of money. All right. As shitty as it is right now, dealing with the volatility, the drops, right now is a perfect time where people can make a lot of money over the long term. Let's see. Galveston County Mike, again, I really appreciate that, man. You didn't have to. It said that rich people rent their homes and own homes for leases. Msty will pay you $2 for the rest of your life. Yep, that's right. That's why I'm going to buy it with $10. I'm going to buy it and I'm just going to hold that. Msty actually did well today. You're absolutely true. You're absolutely right there. Msty did do very well. Like Bitcoin is, and I keep bouncing around, but Bitcoin is actually doing very well relative to how it's been performing over the last month. So hopefully it continues this way. Again, shout out to any Bitcoin holders out there or Msty holders or MSTR investors, MicroStrategy investors, because you guys have been in for one hell of a wild ride. And I was just thinking about this, and I know like we kind of meme it on this channel, but imagine if you got in on Msty when it was like $17, when Bitcoin was at its all-time low. Like you'll probably always be happy as long as Bitcoin remains above 80,000. You're always going to be happy. And, Msty's still paying out. So, and I laugh about this, but maybe in the long term, there's two camps. There's people who make fun of Msty and people who own Msty, right? In the long run, we're really going to find out who was right. We're really going to find out who was right in all of this. Latro says the financial planners are almost all useless because they don't account for 10% of annual loss of purchasing power of the US dollar. Yeah, that's true. So I will say I spoke to a financial planner, a CFP. And, because I was always of the camp that, CFAs, CFPs, certified financial advisors are, like, why do you need to hire one nowadays when everything is so freely available? And, he brought up some really, really good points. The shitty thing about CFAs and CFPs is that they are tied to whatever company that hired them, right? So let's say institution A hired these guys. Well, these guys are tied to their products and services, right? They can't deviate from their product or service. If the institution says, 30% bonds, 60%, equity, and 10% international stock, then these guys have to do everything in their power to basically get them to model that portfolio. Forget gold exposure, forget, freaking high income exposure, forget all, individual stock exposure, forget all that. They just try to get them to follow this formula. But CFA, CFPs, they are very, very, they're worth their money. When like, how I'm trying to say this very carefully. CFPs and CFAs are worth their money for people who don't know anything about the stock market. They're busy professionals. They don't want to deal with, monitoring their assets. Yes, they could put all their money into an index and call it a day, right? An S&P 500. That's what we all kind of assume, like, oh, just put your money in S&P 500, max it out, put as much money as you can. And then, in 10 years, 20 years, it'll be worth this much, blah, 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 compound interest, et cetera, right? But then what they do, where their value comes in, is, okay, well, what about the future, right? How much money do you expect you need to live off for expenses? What about medical? Costs rise over time and this and that. So they really help you think well into the future and what your costs might be, and then how your investments will be able to cover that or not, right? A lot of us, and myself included, I'm guilty of this 100%. You know, I'm always thinking like, oh, I'm always going to have enough money in the future, whatever those costs might be, my investments will cover it. Well, how much are those costs going to be? I don't know, but I know I'll have enough for my investment income, right? That's kind of the trap I think a lot of people fall into. CFAs, CFPs, they have their value. Not all of them are crooks, because there are some crooks out there that will just take the money, make your portfolio basically go into the dumps, and then as long as they collect their fee, like they're good. But, you know, there is something called a fiduciary out there, and the fiduciary, CFA, CFPs, those types of people, a fiduciary means that they have to put your interests ahead of their own. So even like, you know, they don't care really about the fee. They care about the fee, but they don't. They care about you as the person more so, and your future. So they're gonna put your interests ahead of their own. So that's where, like, you know, anytime I see people saying, oh, is there a good CFA, CFP out there? A lot of the times people will say, make sure that they have a fiduciary responsibility, right? Because they will announce that. The CFA, CFPs, they will announce that they have a fiduciary responsibility. So always good, you know, to at least keep that in the back of your mind. Let's see. Citizen here says somehow msty continues to do well, bro. Just, you got to admit it, man. Like, at one point you're gonna have to go back. You're gonna have to make a video and apologize for all the sarcastic remarks you have about msty at some point. Like I said, in the future, one of us, well, not one of us, but, you know, one of the camps is gonna be right. Either msty was an excellent investment, or you know, or not a so good investment if MSTR, you know, ends up going bankrupt. I really think that's the biggest issue with MSTR is what happens if they can't pay the bills. Do they start selling their Bitcoin? I think that's going to be the biggest risk for that company, more so than anything. And I think you know that as well. Let's see. Galveston County Mike says another wealth building tool is prenup agreements. Protect your assets. Yeah, that's a big one I always read about, is the prenup. That one is such a touchy subject. I've read about people who had that conversation, and then it turns into sometimes it turns into the, oh, you don't love me kind of deal. You know, like, you just want to protect yourself. People with large amounts of wealth, they will get that prenup. But not only that, the one thing I always read about too that's kind of misleading is like the LLCs, right? People are like, oh, should I get an LLC for my assets? You know, for tax benefits? It's like, you guys got to say it with me. LLCs do not give you tax benefits. They are asset protection, right? It's used for asset protection. It's used for limited liability. It's in its name, right? Limited liability. In case something goes bad in the assets held under the LLC, you won't be harmed. You or your assets on the other side won't be harmed, right? But the same is true on the other end. If you are harmed or attacked or have a lawsuit, then everything in that LLC, as long as you don't pierce the veil, as long as you're not mixing and matching LLC business with your own personal expenses, as long as that is kept under wraps, then they cannot attack that LLC. So I've had LLCs that owned other LLCs, especially for like real estate business. And that is the one structure you want to make sure of. That's why Wyoming is very popular for a lot of real estate investors, because Wyoming is one of, I think, 3 states that aside from Nevada and I think Delaware, that offer anonymity. So if you're going to open up an LLC, you're completely anonymous in that LLC, right? Like only the state actually knows it, but it's not publicized. You can also hire a registered agent to be on that LLC, which is a law firm. And so, you know, you're going to get, you know, typically the way the structure works. And again, don't quote me on this. Don't follow this. I'm not a tax professional, asset protection lawyer, or anything like that. But if you have an LLC in Wyoming and that LLC owns another LLC, let's say in Florida, right? And that Florida LLC owns a couple of your assets, whether it's, you know, real estate or a business or whatever. If someone tries to sue you, right, you own nothing. There's nothing you own. And that's the beauty of LLC and asset protection. But yeah, prenup is usually for, you know, the wife and the husband. So the wife can't, you know, basically take all your assets or take half your stuff. So I see its uses, but you know, the whole love argument usually comes into the picture. Let's see. The T-bill is no longer effective risk-free asset. A better example is a CEF. I'll respectfully disagree, only because I don't know too much about CEFs, but I do know like T-bills. Like if you look at like 3-month T-bills, I won't say like the longer term T-bills, the 7 to 10 year. Like if you look, I think at TLT, TLT is I think the longer term one, but TLT huge spikes up and down right over time. Whereas with something like SGov or Bill or there's another one out there. But that price has not really moved up or down by much over longer periods of time. It's just as good as cash. I think T-bills offer a level of protection or risk mitigation in a portfolio, depending on how they're used. Again, like me and Alex were having a conversation in the Discord today about, you know, if you want to kind of trade flat, I was recommending, hey, add T-bills to your portfolio. But again, like it really depends on a lot of things, right? Age, risk tolerance, your goals, all that stuff. But if if say you had like an account, a brokerage that offered no money on sitting cash, then yeah, something like SGov would make sense. And it's just going to smooth out the ride. But if you're younger, in your younger years, you know, like sub 25, I guess, you know, you want to be as exposed to equities as much as possible because everything, you have a longer time horizon to let your money grow, right? You can weather the volatility now, as long as the stocks don't go to zero, or as long as, you're investing in like broad-based ETFs, then you can weather a storm, right? As long as you're not margin to the tits, like some of us other people, as long as you're not margin to the tits, and you can weather any kind of storm. Even if the stock market drops 50%, that's a buying opportunity for you as a young new investor, just to drop as much more, cash as you can into the portfolio. Because over the long term, again, thinking beyond, 3 to 5 years, over the long term, you're going to make out like a bandit. Stock market will recover and it'll go higher. That's just the way the stock market is designed. It's not designed to trade flat. Let's see. Galveston County says a prenup is a great test of the character of your future spouse because no doubt your kids will turn out just like her. Be careful. Must be speaking as like a man who's got that experience, got that t-shirt. So I appreciate the wisdom, man. I really do. I really do appreciate that wisdom because, I haven't been at that level yet. I don't know if, I will, but hopefully the outcome is positive. Hopefully the outcome is very positive. Let's see. Income Baron says, I use weak SOFR and CSHI. Yeah, I remember you mentioned that, Income Baron. So that's awesome. You had, I guess I can't confirm it or not confirm it, but Blair's portfolio, he was the one that came out with the whole weak strategy or SGov strategy, using that and then taking margin. So shout out to him, I guess, for coming up with that. But I was seeing a lot of like chatter, excuse me, in other communities and seeing it in comment sections and things like that. Like, oh, people should use, these treasuries as a method of just purely using margin, which I thought was like, that is so dumb, because the argument was, oh, the interest yield will pay off the interest of the margin. I was like, that is totally wrong, but whatever. But I think treasuries have its place for older investors, depending on risk tolerance, right? Depending on time horizon, all that thing. Like for me, I don't ever expect to really use treasuries as a long-term investment. Unless, the strategy changes or something else. Like I was never a bond guy. I don't want to hold bonds. I'm a young investor. I want to capture as much equity and an upside as possible. So for, basically even now, I'm still 100% in equities. But again, if you were talking to a CFP, a CFA, they'd probably, oh, well, you need to have, your bonds and age and blah, blah, blah. Again, me just knowing the history of the S&P 500, over since 1928, it's returned about 10%. I mean, what else? Like, what, you can't convince me otherwise to include bonds in my portfolio for any other reason. Would it help kind of level out, you know, the volatility? Sure. Would it prevent, you know, probably some catastrophes from happening in the portfolio? Sure. But again, I'm still young enough that I can weather the storm and just continue on investing. Excuse me, guys. So we're pretty much at the top of the hour, guys. Yeah, appreciate you guys. If you hit that like button, if you really like this content, today was really interesting. Went really off script, totally off script. Was not expecting that. So I really did enjoy the stream. I really hope you guys enjoyed the stream as well. Yeah, I'll close this out real fast. You know, the S&P 500 down what was it, 2.3%, NASDAQ down to almost 2.5%. Wait a minute, that doesn't make sense. Oh, yeah, that's weird. Huh. All right. Yeah, so NASDAQ is down 10 basis points more. Bitcoin holding at 87,000. Gold, still the best performing asset year to date. Still doing very well. I really was thinking like, man, I should probably, if gold is going to continue on this trajectory, look, it's almost at 30% already. It's already at 30%. You would have had a 30% gain if you invested in gold, right? And I was like, oh, maybe I should just buy a gold, you know, 3x gold levered ETF now. But I'm like, it's, at this point, it's already too late. I'm just going to ride out and rock out with what I got and just keep going, because it's just, yeah, like I think it's already too late to be getting a gold ETF, but I don't know. I mean, there's still like 8 months left in the year, or 7 months left in the year. So I don't know. People got to make their own decisions. 10-year treasury, which I don't have up here, but yeah, 10-year treasury, I last looked, it had spiked up, which is a total kick in the butt. Our administration has to fix this. Like, whatever this is, they need to fix this. Vanguard, which again, I use as a barometer for the REIT space, is down 2%, which is really shitty because we were on an upward trajectory, or we were recovering. And then now we had this pretty bad dip. So is what it is. Just got to deal with it. Again, still performing better than the S&P 500, right? Still outperforming technically, next to gold, but man, gold is just on a rip right now, just on a total rip. So shout out to anyone that has any gold and that's using gold. But other than that, guys, I think that's going to do it for me. Not going to hop into a portfolio update. Maybe I'll do that in the next stream or something. But hope you guys enjoyed the stream. I really did enjoy the stream. It was completely off the cuff. Didn't even talk about what I wanted to talk about, but you know, this was really fun. So I hope you guys got a lot of value from it. I'm going to get going. I got to hit the gym, and I will see you guys in the next stream. I'll catch you guys later. You guys have a great rest of your evening wherever you're at in the world. Take care. I'll see you next time.